Good afternoon, everybody. Welcome back to the weekly market analysis for the week ending January 27th, 2023. It's the last Friday of January. Next week, we're already getting into February. Let's just go ahead and jump in. This week, we had a bunch of different economic data come in. Everybody's anticipating FOMC next week. And the markets are sizzling red hot. And the question is that going to continue? Have you missed out already on getting into the new bull market, and should you be chasing? Should you be buying in right now? Is now the best time? I'm gonna, as some of you know, let me just actually take a moment and say, if you want to follow me for more insights, you can follow me on Twitter at Mr. J. Thomason. You can also subscribe to my Substack at befinanciallyfree.substack.com. You guys know, if you are regulars here and if you subscribe to my newsletter, that I spend time weekly posting content and doing data analysis and things like that and looking for signals. And so I'm going to leave the data analysis on PCE data and a few other things to the side for a bit. But I do want to mention that on Twitter, I've recently posted a deep dive on looking at recessions through the lenses of the indicators that the NBER uses to call recessions, when recessions begin and when recessions end. So go check that out. And I will be this weekend doing a dive on the PCE data and a couple of other pieces of data that I thought were interesting this week. And so go ahead and subscribe and look forward to that. And now going into the markets, here we are looking at the markets through the sector ETFs, not the sector ETFs, the index ETFs right now. Looking first at the SPY. And here we're basically showing green dot means strong on the long-term time frame. And then green candle means strong on the more near and medium term time frames. I do want to call out here that we are in a little bit of overbought territory, at least on the Ripple oscillator, as shown through this little X, this little yellow X. So that's just a caution there. I actually do believe that next week, unless the FOMC rate decision and press conference has a dovish surprise. Right now, I believe that the 25 basis points are priced in, and I think that right now a lot of market participants are assuming a pause or maybe just one more 25. In fact, rate hike odds suggest a 25 here and a 25 at the March meeting, and then a pause. And that's what the market's expecting. That's what's been priced in. China reopening has been priced in, or is being priced in. And I think a lot of the economic data recently has people thinking that a pivot is going to be actually quite a bit closer than we think. And so I think that there's right now a lot of froth in the markets, and you're kind of seeing that. Like I'm going to just take a sidebar here and show you a side-by-side here on MGK, on MegaCap. So if you notice, I have on the right window, I have the daily. On the left side, I have the weekly. And what I want to point out to you is that on the daily, we're getting into, on the very bottom indicator, we're getting to some territory that is pretty uncommon and usually comes right before a pullback as far as being overbought. And then we also really interestingly on one of the oscillators that I sometimes look at, we've been overbought for some time, and what's really interesting is on today's price action, you would expect that the oscillator would be heading upwards, just like the oscillator down here at the bottom, and it's not. I think that's kind of interesting. And then you'll also notice that I put this volume indicator on because I want you to see just the level of the volume spike today. This is like based on previous history, this volume spike is significantly above average. And I went and looked back. There's only one time in MGK that you see a there's only one time in MGK's history as an ETF that you see the same kind of pattern where you see it approaching overbought territory or already in overbought territory, along with this type of volume spike on this recent price action. And every single time that had, or I'm sorry, every single time that one other time was August of 2020. And when this volume spike took place at an overbought condition, price over the next 16 trading days or 17 trading days ended up coming off 10%. On MGK specifically, and that coincided with the 10% drop in markets that we saw going from the end of August into September of 2020. So I do want to call that out. There is just a lot of froth in the market. I want to point out this to you. I have this scatter plot where I chart relative strength versus relative volume, and you can see up here like MGK is just astronomically off the charts. That's the type of, when you see that, when I've back tested this and put in other data, when you see that kind of thing unfold, that's the type of volume and price action in a FOMO event. Like when you're getting into, like, I wouldn't say blow off, because to me, I don't see this off a bear market. You typically don't see blow offs following, like, in a bear market rally or at the end of a bear market. But this is the type of froth that you see before a pretty significant pullback. So I was on Twitter kind of calling out the warning signs there. And that's the way, that's what I wanted to show you guys to kind of explain my thinking here as it relates to why I think the markets are moving, why I think this is dangerous price action, why I think we're due for a pullback. I'm not sure how severe it will be. Like, it could be, depending on what you're looking at, which index you're looking at, or what sector you're looking at, it could be minor, it could be major, but I do want to call that out. So SPY is up. We're kind of battling this kind of overhead, like near-term resistance level, so that is something that you want to be apprised of. But right now it looks bullish, but there's no opportunity here to buy. You just got to be patient and wait for the pullback, wherever that is here. And the same thing is true on the Qs for the NASDAQ, seeing pretty strong price action ever since the beginning of the year. And so everything is green across the board, but we have kind of been in, if you look at this yellow X, we've kind of been, at least on the Ripple oscillator, in overbought territory for some time, and you haven't seen any green down arrows or anything like that. That suggests that that we're still kind of up at that level. So it's just a dangerous spot to try to buy into. I just want to call that out. And then on the IWM, which is the Russell 2000 ETF, what's interesting here is the Russell is not giving that same confirmation green signal. So if you look back at the NASDAQ, we've kind of toyed with a couple of yellow signals, and the same on the S&P. But on the Russell, we've hit this kind of overbought on the Ripple oscillator, but then we haven't gotten the green candle confirmation. So I think that that's kind of a warning sign, showing you that that the markets are not necessarily all confirming each other on this new price, or on this price action. And then I just want to call that out. And then the Dow is green. On the excuse me a second, sorry, the Dow is green on its near-term price action, but it's actually turned yellow in the last 2 weeks on its more medium to long-term price action. I think that's a warning sign again, and I think it's interesting too, if you compare like the price action of the Dow, we got, obviously the Dow was outperforming to end the year, to end 2022, and then it's kind of been going sideways and failing to make higher highs, even as like the Qs, like they kind of poked above the previous high, at least on a wick basis, and SPY also not making a new high, but I just think that that's kind of interesting, considering the Russell did make a higher high. So again, I'm seeing some conflicting signals in the markets. But what's been really interesting is seeing the price action on bonds this week on the bond ETFs. So I actually am short bonds right now, and I think that it's only a matter of time before these bonds roll over, these bond ETFs roll over. So if I pull up a couple of my little charts that I make, if you would focus specifically on the bottom right, well, let me just zoom it in a little bit more. This will make it a little bit easier. So I have some of these tax signal plots that I look at, and you notice you don't want to be up and to the right in this plot because it means that relative strength versus your z-score, your trailing z-score, you're getting to the point where you're outperforming what you should be doing, and this is kind of like the type of price action when you see the I think there's probably still a little bit of room for the bond ETFs to be bullish because because they're more to the left of their quadrant rather than to the right of their quadrant. But this is typically when you see a lot of crowding up here in this area, it means that you're likely to get a mean reversion. And so that's something that I'm watching out for. But what's been really interesting too is if I go to, let me just really quickly, just for proxy's sake, let's go to the 10-year. What's been really interesting is the 10-year yield has been, you can kind of see the dots were red and then green and then red again. But the price action, interestingly, in this last week we've been getting yellow and green candles, and you actually have gotten a signal on the Ripple oscillator that the momentum is turning back to the upside on an immediate term basis. And so what's really interesting is that I think that the 10-year is starting to signal that it wants to go up. And I posted a tweet about this recently that I feel very similar about the 10-year yield as I did right over here. And if anyone has been following me on Twitter, on August 2nd of last year, I posted that that the bond yield was going to make a new high. And of course, I got no engagement here, and everyone was like, no, like that's not going to happen. And obviously the rest was history. So I kind of am having that same sort of feeling. I had that same kind of feeling over here. And so I do want to call that out because the bond ETFs and bonds in general are showing me that kind of signal. Like we got a close in the yellow on the IEI, which is the 3 to 7 year bond ETF on the medium to long term indicators, and then we got a red bar on the short to midterm indicator on the candle, and to me that's a warning sign. And we got the red candle on the IEF, but closed still in green. So I just want to point that out. And we've been in yellow on TLT. We've got yellow bars on TIP, or yellow candles on TIP, yellow candle on JNK. And this to me is the leading indicator on the junk bonds, because the junk bonds are a really good risk proxy. So if the JNK is actually going up over time, then you're actually seeing, then what that means is like risk appetite is actually losing its momentum. If you're seeing the equity indices moving up, you should see JNK moving up as well. And it's kind of just going sideways, and we've got the yellow transition on the medium term to long term indicator, the yellow dot, and we've got the yellow candles for a week and a half straight, along with the downside momentum on the Ripple oscillator that you've signaled here with the red arrow. So, or the red triangle down. So I think that's really important to watch out for. My point is that, and actually, if you go, let me pull up the fixed income ETFs here. And if you pull them up through these lenses, like you can see that for example, this is a MACD right here. The MACD on the daily chart has actually gone, the histogram has gone negative. And the oscillator here is actually like trending towards the downside after being overbought. And the strength indicator down here at the bottom is also heading lower. And so That's just an example of the type of action that I'm seeing. Like the TLT is about to turn red on the histogram. Let's see, let me go to JNK here. You can kind of see on the JNK like what I'm talking about here. On both the daily and the weekly, we're getting some changes here. In the weekly, the oscillator is overbought. So I it's hard for me to look at these markets right now and think that this is a good position to like take longs. What you want to be careful about here is, and I'll go through the commodities and stuff in just a minute, but what you want to be really careful about here is FOMOing into the price action, because what human nature here is fearful of missing out on the rally, wanting to get in to try to make the most of it. And you've got a lot of people chasing, and right now, because the crowd is chasing, it's moving the price up. But the problem is that that's not a wise place to start jumping in, is after all this price action is taking place. So you got to wait for the right types of signals. And to be frank, where you're starting to get some of these pullbacks, or you're starting to get some of these downside signals, they're not lining up at a place where it's really safe to take entries. And so what you need to do is you need to be very cautious and see what happens. Like for example, if I go back to SPY, I'm expecting that there's going to be some retracement here. And the question will be what happens on the retracement. And the other thing, the lingering thing for next week, and the thing that could totally change everything, is the FOMC meeting. Because like my suspicion is next week the markets will be red across the board. Of course, the FOMC could be dovish and it could cause markets to take off even further, but barring some kind of dovish surprise, I expect the markets to actually come off. And it's in that situation where you want to look for the opportunity, because you're going to get that pullback. And if your bias is to the long side, if you think that we're going to go up more than we're going to go down in the long term, then that would be the opportunity to place the buy orders. But until you get that, there's no safe place to manage your risk here. So I just want to call that out. So let me run quickly through some commodities. The commodity index is the DBC is actually flashing a sell signal, which is really interesting. Commodities have had a pretty good run. And this is another thing, that the commodity index is actually kind of lagging in spite of all of the China reopening narratives and all that kind of stuff. So that is something I want to call out. Uranium has a major exhaustion signal, so that's something that I want to be aware of there. The same thing on the Global X Uranium ETF. So your URNM is the miners ETF. URA is just the uranium. It's designed to more follow the price of actual uranium than anything else. USO, so oil. This is giving you a signal that oil may be rolling over, so I want to be aware of that. UNG, super oversold. So you actually can see, if I pull this back up and go to my volume scatter plot, you actually can see UNG over on the left side here. This actually is capitulation behavior. When you see low strength and you see the relative volume increase, and this actually isn't as high as it was yesterday or the day before. I can't remember which day I posted, but we're talking about like capitulation behavior there, as well as when you look at the commodities on the tax signal chart, you have UNG way down here. So again, those are consistent with capitulation behavior, and it makes a lot of sense because I've seen so many articles talking about how natural gas is like destined to go down. Like, I don't have that index up. I just am using UNG here as the proxy, but I've been seeing whispers of, nat gas is gonna go below $2 and like it's gonna crash down further, and everyone's so bearish on it, and that's the type of what we just saw with all the volume and stuff like that is typical capitulation behavior. So this is actually like something that I'm watching for a long if I can get the confirming signal, which, believe it or not, like we might have that because we've got the switch from red to yellow on the long term and the switch to yellow on the near term, after having been severely oversold and exhausted to the downside on capitulatory volume. So that's a really good spot, a really good thing to look at. Metals getting the same kinds of signals. Gold is going to pull back. It's just going to happen. I don't feel any qualms about calling that for next week. Gold is going to pull back. The question is going to be ultimately how far is it going to pull back. Let me see. I had a whole thing about Bitcoin last week. I don't really think I need to go into that. I do want to also call out China is very overbought and exhausted to the upside. So I'm going to be watching next week to see if we get some rolling over on China, and we get kind of a retrace. So that'll be something I'm watching for. And then UUP, that's the dollar bullish ETF. We're actually getting some signs of life here. And so we've got 2 yellow longer term signals, and then we've been kind of doing some yellow signals consistently in the daily candles. So I want to call that out as well. Anyway, so I would say that if you haven't been taking advantage of the long situation or of the long positions, of the bullish price action over the last week and a half, 2 weeks, 3 weeks, it's too late for now. You have to wait for a place to actually position in where the risk to reward is better and where you can manage your risk around clear levels. Because right now you don't have that. And it looks like, in my opinion, the markets are getting ready to kind of have a pause in the bullish price action. And the question for me is going to be, going into next week, when we get the inevitable pullbacks, are these pullbacks going to be just slight pullbacks before resuming back up, or are they going to be the start of something bigger to the downside? And so that's the question going forward. So that's all for today. Again, don't forget to hit the like button and subscribe and follow me on Twitter, and also follow my Substack. And I'll see you guys next week.